Today we will be learning the concept relating to income tax, like what is total income, what is tax liability, how it is computed and charged on your respective income. The levy of income tax in India is governed by the Income Tax Act 1961, and the act came into force when rules were drafted in 1962. Every year, the Finance Minister of India presents a budget to the Parliament, where the proposals relating to tax revenue and tax expenditures are discussed. Such budget is proposed to the Parliament by the Finance Minister. The Finance Ministry is governed by the Government of India. Under Finance Ministry, we have our Department of Revenue, which controls two divisions. Division 1 is called CBDT, that is Central Board of Direct Taxes, and Division 2 is CBIC, that is Central Board of Indirect Tax and Customs. CBDT deals with all direct tax related matters like income tax and their assessment. And Division 2, that is CBIC, deals with goods and service tax, custom and other indirect taxes whichever is applicable in India. Each year, government represents a budget to the Parliament, where a discussion on proposals are held by the member of the Parliament. When it gets the approval of the majority of the members, it is further sent to the Honorable President of India for the final consent. After the consent of the President of India, such bill is converted into an act. Presently, our finance bill is termed as Finance Act 2019 in terms of related previous year 2019-20 and assessment year 2020-21. Many of my friends receive assessment order or letter from the income tax department, and they are little bit confused about its technical wordings of order. So they usually ask, can you brief and explain about these legal wordings? My dear friends, let's have an fundamental overview. Before proceeding to know what is total income and tax liability, let's have an understanding of its basic terminology, like the word SSC. SSC simply means a taxpayer, the person to whom any sum of amount in the name of tax, interest or penalty is payable, either in respect of his own income or any other person's income. In the eyes of income tax, every person is not an assessee. By the way, it will be right to say that every assessee is a person. Here, person means all categories of taxpayer, like individual taxpayer, Hindu undivided family, any corporate assessee, any partnership firm including limited liability partnership firm, any body of individual, association of person, any NGO, municipal trust, any local authority, and so on. Now we can say that whatever firm you have created for the purpose of furtherance of your business or profession, it will be termed as a person. Next concept to be discussed is about the previous year. It is basically called a duration of 12 months. In accounting terms, we can say it is a financial year. But when we talk about income tax, it is termed as previous year. Previous year is the year in which normally a person earns income or he starts his business or professional venture. The duration of previous year starts from the first day of the year and ends on 31st March of the next year. Suppose Mr. A starts employment on 1st April 2019. Accordingly, his previous year shall be 2019-20. But when we talk about Mr. B, who is starting his professional venture on 1st August 2019, in this situation, previous year will not start from 1st April. It will start from 1st August 2019 and end on 31st March 2020. The next related concept is assessment year. It is the year in which tax liability is discharged by the taxpayer. Tax is paid to the credit of the central government and assessment procedures are discharged. Also, under assessment year, returns are filed by every assessee. Both previous year and assessment year are interrelated. One year is generating revenue and another year is discharging the assessment procedure. Now let's take an example. For previous year 2015-16, the related assessment year is 2016-17. For previous year 2016-17, related assessment year is 2017-18. And at last, for previous year 2020-21, the related assessment year shall be 2021-22. Now, your attention is required here as we are going to discuss about the basic tax rates. In fact, we can say slab rate, which is applicable to an individual, Hindu undivided family, body of individual, and association of person. When we talk about tax rates, it is applicable to an individual or HUF as per their residential status and age in India. Indian income tax has been divided into three slab structure. Structure A is applicable to an individual, HUF, AOP and BOI having age below 60 years during the previous year. When total income does not exceed rupees 2,50,000, the tax shall not be charged here as it is a basic exemption limit. But when income exceeds beyond rupees 2,50,000 but below rupees 5 lakh, it will be chargeable at the rate of 5%. Where the income exceeds above 5 lakh but not rupees 10 lakh, it will be chargeable at the rate of 20%. Further, where income exceeds above 10 lakh, it will be chargeable at the rate of 30%. So basically, we have categorized the tax rates in first one is exempt and next is 5%, 20% and 30%. Now structure B. It is related to senior citizen clause where an individual HUF, AOP or BOI having age above 60 or at 60 at any time during the previous year, then here an additional exemption of rupees 50,000 is available. That means up to rupees 3 lakh there shall be no tax because it will be an exemption amount. Where income exceeds above 3 lakh but up to rupees 5 lakh, it will be chargeable at the rate of 5%. And further, income exceeds above 5 but not rupees 10 lakh, it will be chargeable at the rate of 20%. And at last, where income exceeds above 10 lakh, it will be chargeable at the rate of 30%. Now structure C. It is relating to very senior citizen clause where an individual HUF, AOP, BOI having age 80 years or above at any time during the previous year, then total income shall be exempted up to rupees 5 lakh because it shall be a basic exemption limit. Beyond rupees 5 lakh but below 10 lakh, it will be chargeable at the rate of 20%. Above 10 lakh, it will be chargeable at the rate of 30%. So this was all about the tax structure whichever is applicable in India. So today we covered basic concepts of income tax and tax rates which is applicable in India. In the next lecture, we will cover more about different aspects of income. Keep learning, keep growing. See you next time.